Question 28. The partnership of Win, Xie, Yang, and Z has the following balance sheet. So on this balance sheet, we know each of the partners' capital balance. We also know how we can allocate loss or profit among them. So for example, Win is going to allocate 50% of profit or loss, Xie get 30%, Yang get 10%, and Z get another 10%. So Z is personally insolvent, and one of his creditors is considering suing the partnership for the $10,000 that is currently owed. The creditor realized that this litigation could result in the partnership liquidation and does not wish to force such an extreme action unless Z is reasonably sure of obtaining at least $10,000 from the liquidation. Determine the amount for which the partnership must sell the other assets to ensure that Z receives $10,000 from the liquidation, and liquidation expenses are expected to be $30,000. Let's prepare the pre-distribution plan, and that will be very helpful for us to solve this question. So this plan is to find who is going to be the weakest and then eliminate their capital balance one by one, and then we'll figure out who is going to be the one that survives of those gradual losses. Okay, so let's start with their current beginning balance. Based on their beginning balance and the schedule on how we allocate the loss, we can figure out who is the most weakest one. And so let's start with step 1. So step 1 is to try different numbers to figure out what's the amount we need to eliminate the capital balance of each partner. And for example, for Win, assume the loss is x1. In order to eliminate Win's capital balance, we need amount that times 50% is going to equal to its current capital balance. The amount is $200,000. And we're going to do the same for the other 3 partners as well. And after we complete the calculation, you will see that the easiest one is Win. In order to eliminate Win's capital balance, we need $200,000. But to eliminate other partners, we need more than $200,000. Okay, so Win will be the first one to be eliminated, and so that's the step 1. Step 1 will assume a loss of $200,000, and then Win is going to take $100,000 loss, and then step 1. But after this assumption, the step 1 balance is going to be 0 for Win. And Xie still have $24,000 left, Yang have $30,000 left, and Z have $20,000 left. Okay, and then we can move on and to eliminate another partner in the second step. So second step is to find another weakest partner, and based on the same calculation, we can find that. So x1, so this is for Xie, we need $40,000 loss to eliminate Xie's balance. So that's what we need in the second step. In second step, we assume a loss of $40,000. Then Xie need to take $24,000, Yang take $8,000, and Z take another $8,000. So then step 2's balance is going to be 0 for Xie, and Yang have $22,000 left, Z has $12,000 left. And then because Yang and Xie now they kind of need to share the loss equally, and which means that if we have a loss of $24,000, and that's enough for us to eliminate Z, and Yang still have $10,000 left. So this is the pre-distribution plan, and based on this plan, let's see how we can answer the question. Based on the current balance sheet, we know that the partnership has $40,000 cash and $66,000 liabilities. Also need to pay liquidation expense of $30,000, but its total other asset worth $300,000. So then this distribution schedule will look like this. First, the $40,000 cash need to be used to pay the liabilities. Well, that's not enough. Then they need to sell additional $26,000 cash to pay off all the liability. In total, that is 66,000, and then they need to sell another $30,000 cash asset for the liquidation expense, and then okay, so then after they paid all the liabilities, then they can allocate additional available fund to those partners. So based on the distribution schedule, we know that the first 10,000 will be given to Yang, so that's based on this amount. And then if they have additional 20,000 available, then they can split this 20,000 available fund to Yang and Z equally, which means that now that can get 10,000. So based on this last table, we can calculate how much asset need to sell to obtain 10,000 for that. So this is the total amount sell asset need to sell. In total, that is 86,000. So if the company can sell can obtain $86,000 cash by sell the asset, then that can get 10,000 to pay for his liabilities. By looking at the balance sheet and their total other assets 300,000, then it's likely that they do have enough fund to pay for it.